Let me ask you something real quick. Have you ever opened the investing app, looked at the charts, saw green, red numbers flying everywhere, and thought, yeah, I'm definitely going to screw this up? Be honest, because nobody talks about this part, not the how to invest part, but the feeling stupid before you even start. The fear of pressing the wrong button. The fear of buying at the top. The fear of looking back in 5 years and thinking, man, I had time. I had money. I just didn't move. And the worst part? It's not that you don't want to invest. It's that you don't trust yourself yet. And today, we're fixing that. Because if you can learn one thing from this video, it's this. Investing isn't about being smart. It's about not sabotaging yourself before the game even starts. And if that sentence hits you, stay till the end. Because the last idea might completely flip how you see money. Point 1. Why smart people feel the dumbest about investing. Here's the weird truth nobody tells you. The people who feel the most stupid about investing are usually the smartest ones in the room. Yeah, I know. Sounds backwards. But hear me out. Smart people overthink. They see every risk, every headline, every what if. What if the market crashes? What if I buy the wrong ETF? What if I should have waited? Meanwhile, some bloke named Dave is dollar cost averaging into an index fund, vibing through recessions like, yeah, nah, she'll be right. And guess what? Dave wins, not because he's a genius, but because he shows up. Swiss investors call this discipline. Norwegians call it patience. Aussies call it not overcooking it. Americans? We usually call it boring until it works. Here's the punchline. Investing rewards consistency, not confidence. And confidence comes after action, not before. So if you feel unsure right now, congrats, you're normal. You're early, and you're exactly where you should be. But here's the trap most people fall into next. And it's deadly. Point 2. The I'll start when I know more lie. I'll start investing once I understand everything. Let me translate that. I'll start investing. Never. Because here's the uncomfortable truth. You will never feel ready. The market doesn't wait for clarity. Compounding doesn't pause for confidence. And time is ruthless. Every year you delay isn't neutral. It's expensive. If you're 20 and you wait 5 years to start investing, you don't just lose 5 years of growth. You lose decades of compounding. That's not drama. That's math. British investors call it opportunity cost. Canadians politely say that's unfortunate. Germans, they call it inefficient. Inefficient. And here's the part nobody wants to hear. The market doesn't care if you feel stupid. It only cares whether you participated. And the longer you sit on the sidelines trying to be perfect, the more expensive perfect becomes. But before you panic, breathe. Because the goal is not to be right. The goal is to get started without blowing yourself up. Which brings us to the single biggest mindset shift you need. Point 3. You're not trying to be right. You're trying to stay in the game. Here's where most beginners mess up. They think investing is about picking winners. Wrong. Investing is about not getting knocked out. The pros don't win because they predict the future. They win because they survive long enough for averages to work. Think about it like this. You don't need the best portfolio. You need a portfolio you won't panic sell. That's it. Swiss wealth wasn't built on YOLO trades. It was built on boring systems, low fees, and long timelines. The most dangerous thing for a beginner isn't a bad stock pick. It's emotions, fear in downturns, greed in bull markets, and comparison when someone on the internet gets lucky. If your strategy depends on you being calm during chaos, you don't have a strategy. So instead of asking, what's the best investment? Ask, what's the simplest plan I can stick with when things get ugly? Because they will get ugly. That's the cost of admission. And once you accept that, everything gets easier. But there's still one psychological landmine left. Point 4. Why small money feels scarier than big money. This is going to sound counterintuitive. Investing small amounts often feels scarier than investing big ones. Why? Because when you don't have much, every dollar feels emotional. It's rent money, freedom money. Don't mess this up money. So beginners freeze. They think, what if I lose this? But here's the reframe. The real risk isn't losing money early. It's never learning while the stakes are low. Early investing isn't about returns. It's about reps. Messing up with $500 teaches you more than reading 50 threads on Reddit. Kiwi investors get this early. They start small, automate, and let time do the heavy lifting. You don't learn swimming by watching YouTube. You learn by getting in the water. And yes, it's cold at first. But staying dry forever doesn't make you safer. It just guarantees you never move forward. Which leads to the most practical question of all. Point 5. So what should you actually invest in? All right, let's cut through the noise. If you're a beginner, you don't need complexity. You need exposure. Broad market, low cost, automatic. That's it. Not day trading, not meme stocks, not whatever your mate made money on last week. Index funds exist for one reason. They work quietly, relentlessly, over time. They remove ego. They remove prediction. They remove decision fatigue. American slang? Set it and forget it. Swiss mindset? Efficient and boring. Australian translation? Don't stuff around. You're not trying to beat the market. You're trying to own it. And the moment you stop trying to be clever, you start winning. But investing isn't just about what you buy. It's about how you behave when the market punches you in the face, which it will. So let's talk about that. Point 6. The first crash is a feature, not a bug. Your first market drop is coming. Not maybe. Not eventually. It's coming. And when it does, you'll feel it in your gut. Your app turns red. Headlines scream panic. Group chats go quiet. This is where investors are born. Not when markets go up. That's easy. But when markets fall and you don't flinch. The first crash teaches you something priceless. That volatility is normal. That fear passes. That selling locks in regret. Norwegians call this stoicism. British investors call it keeping a stiff upper lip. Americans usually call it, why did I even open the app? Here's the secret. If you survive your first crash without selling, you've already beaten most people. Because now you trust the system more than your feelings. And trust beats intelligence every time. But there's another enemy you haven't faced yet. Point 7. Comparison will ruin you faster than bad returns. Someone will always make more than you. Earlier, faster, louder, ignore it. Comparison is the tax you pay for scrolling too much. You don't know their risk, their timeline, or what blew up behind the scenes. Counting other people's money won't grow yours. Wealthy investors don't obsess over other portfolios. They obsess over their process. Because real wealth isn't flashy. It's quiet, it compounds, and it doesn't need validation. If following someone makes you anxious, unfollow them. Protect your focus like it's money, because it is. And once you stop comparing, something powerful happens. You start thinking long-term, which brings us to the final mindset shift. Point 8. Investing is not how you get rich, it's how you stay rich. This might surprise you. Investing doesn't create wealth out of nothing. It multiplies what you already earn. Income fuels investing. Investing preserves and grows income. They're partners, not replacements. Trying to invest without income growth is like trying to fill a bathtub with a teaspoon. That's why the smartest young investors focus on two things: building skills that increase income, automating investments so money compounds quietly. You don't need to trade harder. You need to earn smarter and invest consistently. And this is where most people get it backwards. They chase returns instead of building systems, which is exactly what I break down in my next video. But before we go there, let me leave you with this. If this video hits you even a little, if you've been stuck between, I know I should invest, and I don't want to mess this up, then your next watch is already waiting for you. Stop trying to make more money. Do this instead. That video connects everything we talked about today and shows you exactly what to focus on next, depending on your age, income, and situation. Click it on the end screen. I'll see you there. And remember, stop trying to be smart with money. Build the system first. Money will follow.